What's up, traders? Welcome back to my channel. Today we're stepping outside my specific strategy and diving into something every serious trader needs to understand, right? It's liquidity, okay? So for my strategy, yes, we're looking for highs and lows, PDHs or PDLs, session highs, session lows. All these are liquidity handles or liquidity grabs, right? Places where liquidity is sitting at to be swept, taken, or just ignored altogether, right? But it'll come back eventually. It might not come back that day, but it might come back another day, all right? So liquidity is simply where money sits in the market. Think of it like fuel. The market needs fuel to move, and the fuel sits above highs and below lows, okay? Every stop loss, every breakout order, every pending order creates a pocket of liquidity, okay? I just wanted to show you something real quick. If you look right here, right? Here, this purple line, that's the high and the low of the day before. So this day was Tuesday, November 18th. So today, yesterday, my bad, yesterday. And uh, the levels were marked out for the day before that, which was Monday's level, right? Every single day, the market moves to take these lows or high. Every single day. It takes at least one of them. Okay. Now, in New York session, which is where I like to look, right? It likes to come and take these levels. As you can see, it already took it right at open. 9:30, it came and took this level. Just like that. All the liquidity that was sitting right here, taken. Okay? Don't worry about this purple line. It's for a different day. But all the liquidity right here was taken. This purple line up here was also a different day. As you can see, we just kept going down and kept going down, kept going down. It broke through this liquidity, tapped into the 8% line. Liquidity sits there as well. And what did it do? It just kept going. Now let's go back and look at a different day, right? Here, I will mark out another day last week for y'all. Let's take this one. We'll put it right. Put it right here. We'll put this one right here. Now, when you're looking at the daily levels, there's 4 levels that you need to mark out, right? Where liquidity is sitting at, okay? You got the top of the wick, the bottom of the wick. That's the highest point that the day has reached and the lowest point that the day has reached. Then you have the body of the candle and the body of the wick. Or, I'm sorry, the body of the candle low and the body of the candle high. This is also where the market either opened and closed at. Okay? We'll go ahead and mark out this right here, and we'll turn these green. That way I know to delete them. All right. Now, let's replay all the way to right here. We'll replay to this day, okay? Go down to the 5-minute. Get the market to open up. And then let's go all the way to 10 or 9:30. That's when I like to look at the market for it to sweep those levels. And stop. All right, 9:30 open, right? Now, what I'm looking for is for these levels to get taken now, okay? Because that's where liquidity is sitting at. You want the liquidity to be taken, because if it doesn't, then sooner or later the market is going to explode to those areas for it to take it. You want it to be taken that day. However, it doesn't always go that way for us. All right. So the market sweeps before the market needs orders to push up. It needs to buy stops to trigger, and it needs to push down for the sell stops to trigger. Sweeps are not random. They're fuel for the next move, the big move. Okay. Look, even if you don't trade my strategy, which I look for this, by the way, liquidity applies to every approach. Liquidity helps you avoid buying the high, avoid selling the low, anticipate reversals, confirm momentum, and understand why fake outs happen. It's the foundation it's the foundation of modern price action. Okay. Now, we're going to look for this to happen. It's either going to come take the one down below, or it's going to come take the one at the top. All right. Came and took it the next day. All right. It came and took it the next day. It took it, so it's gone. The liquidity is gone from that area now. Okay. It took the top one. That area is gone now. Now let's see what happens at 9:30. Let's see if it taps into them again. Oop. Go back. Right here. All right. You all saw what just happened, right? 9:30 candle opened up. It took both these levels. Absolutely demolished them. That liquidity is gone. I look for these levels to be taken by 9:30. Every single day, 9:30. That's when I'll delete them off my chart because they're no longer important. Okay? Now, the way that this works for my strategy, right? You're waiting for a London high or London low and an Asia high or Asia low to get swept. London high got swept right here in this candle. It got swept. What I'm waiting for is a retest on one of these IFEGs. Retested right here. It held. They didn't close. So now what I'm doing? Shorting. I'm shorting the market. Stop loss. Goes right up here. TP. Way down here. Now it's played out. Let's see. Market closed. Right here. All right. We're going to do that one more time. All right. Trade. Sell. Stop loss up here. TP down here. And played out. Was that 6:05? Nope. That's 4 o'clock, 4:05, and 4:10. So we ended up the day closing $715, but we did make, or we could have closed at 3,800 after it swept this New York PM low from the previous day. This is why liquidity is important. It's always going to go to those levels to take it out. And that's why it's important for my strategy. I aim for those levels to get taken out. All right. Now, that's your introduction to market liquidity. In the next video, we'll expand on this and talk about displacement, the big moves that happen right after liquidity is taken. Drop a like if you enjoy the educational videos and subscribe so you don't miss day 10. I greatly appreciate y'all and everything that y'all do for me. And I hope that I am able to continue teaching y'all and that you're actually learning something from me. Anyway, I hope you all have a great night, and thank you so much.